Yo, what's up, guys? This is your boy King Tech, aka the Rising Star. I'm back again on your screens with another best content that you'll ever need. In today's episode, I'm gonna be talking about the most powerful strategy that no one has ever talked about in this market. The strategy in which I'm about to teach you, you have never heard of this strategy. Nowhere, no one has ever talked about this strategy, and this strategy has changed my life a lot. It's a magic and powerful strategy. Since the day that I have discovered this strategy, things have always been in my favor. Yeah, I mean, my win rate has increased. I want to share this strategy with you for free as my lovely subscribers and viewers. But if you haven't subscribed to my YouTube channel yet, please just consider clicking on the subscription button, turn on the notification icon so whenever I have a duplex content like this one, you'll be notified. So without any further ado, let's dive into the video. Yeah, as I was saying, guys, with this strategy, it's going to help you a lot. And the reason why I have discovered this strategy is that the reason why I have discovered this strategy is that I can see that most of beginners always find it difficult to identify market structures in their first days of trading. When they just come to the market at the first time on their early days in the market, it is always difficult for newbie traders to identify the market structure in the market. And we all know that in this market, we do our actions or we execute our trades based on the market structures. Whenever market is trending to the upside, we are going to be doing only buying positions or executing only buying positions. And when market is trending to the downside, it means that sellers are in control of the market, which means we should be looking for only selling opportunities in the market. It means that if you don't understand the market structure well, the sentiment of the market, it will be difficult for you to trade the market. You understand? And when you come to the trading books, they will tell you that when market is trending upside, you buy. When market is trending downside, you sell in theory. And they said that when market is moving in uptrend, it creates a series of high highs and high lows. And when market is moving in downtrend, it creates a series of lower highs and lower lows. And these high highs and high lows and lower highs or lower highs and lower lows has been very difficult for most of newbie, almost 90% of newbie traders to identify or to spot on the market chart. When market is moving, it is always difficult for newbies to spot these structures that is created in the market, the high highs and the high lows, or the lower highs and the lower lows. You understand? So I have tried my best. I've tried my best in coming up with this strategy that can easily point to you as a newbie trader or someone who is finding it very difficult to understand market structures. With this simple strategy, it will just make things simple and easy for you. You will trade based on the trend, or you will trade with the general masses. You understand? With just this simple strategy. With this simple strategy, you will always trade in favor of the trend. You will never go against the trend again. You understand? If the strategy tells you that at this moment sellers are in control of the market, you are going to be looking for only selling opportunities. And if the strategy tells you that at this moment buyers are in control of the market, you are going to be looking for only buying opportunities. So you see, that's the magic about this strategy. You just have to do one thing, and everything will be shown to you on your chart. You understand? So as I said, I love you as my cherished subscribers and viewers. So that's why I've spent a lot of time in coming up with this beautiful strategy to help you in your trading process. So if you are finding it very difficult, or if you are having a headache of identifying or spotting market structure, the high highs and the high lows, the lower highs and the lower lows, please worry no more. With this powerful and duper strategy, everything will be simple for you. So with this strategy that I'm talking about, please listen careful. Get a journal or get a jotter and a pen. You need to be writing things down because the strategy is very simple, and I'm going to be explaining everything about the strategy. So you have to write things down. So after when you finish watching this video, you can go to your chart and backtest this strategy and try to apply it on your chart, and you see how it will work out for you. You understand? Make sure you backtest it before you apply it on your trading process. When you come to your chart to look for possible opportunities, what you are going to be doing is you just go to your high time frame. As we all know, as a trader, you must have your high time frame. the time frame in which you identify the market sentiment, the market trend, you understand? And you have your behavior time frame where you'll be marking your key levels and your structures, and you're going to be having your entry time frame. That's your confirmation time frame for entries, which is your lower time frame. You understand? The time frames that we are going to use is the higher time frame and the lower time frame. Our higher time frame is where we will use is what we will use to identify market trend, and the lower time frame is where we enter our trades. You understand? So when you come to your chart, what you are going to be doing is that just go to your daily candles. And as we all know, in this market, if you are in any time frame, for instance, if you are in the daily time frame, it means that each and every candle on the daily time frame takes a day to form. It takes a full day to form, which means that each candle on the daily time frame represents the daily market information, what has happened within a day between market participants, that's the buyers and the sellers in the market. Understand? So what we're going to be doing is that when you come to your chart as a day trader, the opening price level of the daily candle is very important for you. It will help you a lot. It will help you a lot if you know how to use it to make good use of that information. So what we are going to be doing is that when you come to your daily candles, your daily time frame, you choose the current daily candle that is forming. You understand? You know it is still forming until the day ends or the market close, that it will be complete. So once it is still moving or it is still forming, and you want to get opportunities out of that candle in the lower time frame, what you are going to be doing is that if you have to go and take your horizontal line, your horizontal tool, and come and mark the opening price level of the daily candle. So when you mark the opening price level of the daily candle, you then scale back to your 15 minutes time frame. But let me make this thing clear for you. We all know that candle has paths, and the path is the opening price level, the closing price level, the body, and the wicks. The wicks is the shadows, the upper wicks and the lower wicks. So after when you mark the opening price level of the daily candle, the current daily candle, you then scale back to your entry time frame, which is your 15 minutes time frame. That's where you are going to be looking for opportunities to enter the market. You understand? So when you come to the lowest time frame, the 15 minutes time frame, what you are going to be doing is that whenever price is trading below that horizontal line that you've used to mark the opening price level of the daily candle, whenever price is trading below that line, it means that sellers are in control of the market at that moment, which means you are going to be looking for only selling opportunities in the market. Let me take it again. When you come to your entry time frame, which is the 15 minutes, if the market is trading below the line, the horizontal line that you've used to mark the opening price level of the daily candle, it means that sellers are in control of the market, which means you are going to be looking for only selling opportunities. And when you come to the opening time frame and the market is trading above that horizontal same line that you've used to mark the opening price level of the daily candle, it means that at that moment buyers are dominant in the market. Buyers are still controlling the market, which means you are going to be looking for only buying opportunities at that moment. Understand? This is very simple. It's very simple. So what we are going to be doing is that with that line, with that horizontal line, as we all know that in market we don't treat support and resistance as a unique line or unique places, or trend line as a unique line. It's a zones. The same thing applies to this strategy. The line that you've used, the horizontal line that you have used to mark the daily opening price of the candle, is not just a straight line or a unique line. It is a zone. You understand? So with this line, it will serve as both support and resistance for you again. When market is trading below the line, it means that sellers are in control, which means the line will serve as a resistance line for you, or resistance zone where sellers are very strong. So if you are to be looking for the selling opportunities, if market comes closer to the line for opportunities to enter. And how do you do that? One, you have to make sure that when market is approaching the line, there's be a formation of shrinking candles or a depletion of market momentum. depletion of momentum, which means candles are reducing in body sizes. That's one. Understand? The second thing that you have to look for is weak rejections, weak rejection candles. Understand? This can be doji or any candles that are rejecting the horizontal line. That means it's rejecting the daily opening price zone. You understand? Because sellers are resisting the prices. The third thing that you have to be looking for is shift in momentum. You have to see a momentum candle, a bearish momentum candle that shows that there's a shift in momentum. Initial market was pushing up to the zone, and when market came to the zone, you see the market was reducing in body sizes, which is shrinking candles, or there was depletion in momentum, and followed by weak rejection candles. And lastly, a strong bearish momentum candle has formed, which signals that sellers have announced their presence in the market. It means that when you are going to sell, you are not going in line with, or you are going with the general, the mass or the general population in the market. You are not going against the trend. You understand? See how simple this strategy is. The same thing applies for buyers. If the current market price is trading above the opening price level of that daily candle, it means that at that moment buyers are still in control of the market. So you are going to be looking for only buying opportunities. You understand? So with this one, whenever market is coming to the zone or to the line, or the zone, what you have to do is that make sure you see depletion in market momentum. This can be reducing of body sizes of the candles. The sizes of the candles keep on reducing whilst it is approaching that zone. Remember itself as your support zone again. And whenever market is approaching a support zone, and we have seen that there's a depletion in momentum, it means that buyers are about to announce their presence. You understand? So the second thing that you have to look out for is weak rejections. If you see a weak rejection to the line or to the zone, it means that buyers are rejecting what? Lower prices. And the last thing that you have to be looking for is shift in momentum. When you see a strong bullish momentum, candle form, it means that buyers have announced their presence in the market. It means that at any moment buyers can come in and take market up again, or push market prices up again. That's when you are going to be joining the general population and also be buying. You understand? You see, this is very simple. It means that whenever market is above, we look for only buying opportunities. Whenever market is below, we look for only selling opportunities. There are instances where you can go against these rules. You understand? There are instances where market can be above and you'll be selling, or market will be below and you'll be buying. And this happens if and only there's a formation of reversal chart pattern on your chart. If you see a trend reversal chart pattern, for instance, when market is selling and all of a sudden you see a formation of dollar bottom. In theory, dollar bottom means that a change in market sentiment, which means market is about to change a direction. Why? Because when market is pushing to the downside, it creates a series of lower highs and lower lows. So if market fails to create a new lower low, but happens to create equally lows, it means that market has lost momentum to create a new lower low, and which has forced it to create equal lows, which means buyers have stepped into the market and they are rejecting lower prices. So until the price will have to shoot up or to change a direction, which means the sentiment of the market has changed. So in this instance, you can join the market and buy. Why? Because you have seen a formation of trend reversal chart pattern. This can be double bottom or inverse head and shoulder. Inverse head and shoulder to see trend reversal chart pattern that you can rely on. You understand? The same thing applies if market is trading above, which means buyers are controlling the market. If you see a formation of double top chart pattern, it is a trend reversal chart pattern, which means that when market is trading upside, it creates a series of high highs and high lows in the market. So when market fails to create a new higher high, but decide to create equal highs, it means that there's a loss in momentum. The buyers are not strong enough to create a new high, which means sellers have intervened. So The selling pressure that have entered the market is now overpowered the buying pressure or the bias in the market, which means the market is likely to change its direction. To ensure a double top is a trend reversal chart pattern. So if this thing happens, it means that the sentiment of the market is about to change. So in these instances, you can join the market and buy, even though the market is above the opening price level of the daily candle. But because of the formation of this double top chart pattern, which signals trend reversal, you can join the masses and sell. Or if you see a formation of head and shoulder chart pattern, you can join the masses and sell. Understand? Depend on any chart pattern that you've seen, and this is a trend reversal chart pattern. But if it is a trend continuation chart pattern, don't go against the rule. Just follow the rule and be buying or selling. You see how simple this strategy is. You understand? It's very simple. There's one thing that I would also like to add to this is, if you are going to be using the strategy as is support and resistance zones, the line on top of the opening price level line, you can add 3 pips to that and draw your support zone. And below of that, you can add additional 3 pips to that and draw your resistance zone there. You understand? This is very simple. I know explaining like this will be somehow confusing. So let's head over to my computer or to my chat so that I'll demonstrate what I'm trying to teach you guys on my chat and you'll understand it better. Understand? So please, 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 as my lovely viewers and subscribers, if you haven't subscribed to my channel, please consider hitting on the subscription button, turn on the notification icon. So whenever I have a best content like this one, you won't be left out. So let's dive over to my computer and let me show you how to do it. It's very simple.